Hi there. So I'm gonna go over the trades. Today couple of wins and losses. I just delete all those lines. I just go to 4 hour. The big candle flip all the way towards upside and leave this big 4 hour fair value gap. But I didn't mark in the morning. I didn't mark with this fair value gap. And I just marked out this high and I considered this everything as low resistance liquidity run. So for me, I consider it as a more low resistance liquidity run. I like to see higher prices towards this high. So morning itself I was super bullish. So this high has been taken, displaced. So I into 1 hour and 1 hour. I do have the beautiful 1 hour 5 hour gap. So my plan is nothing but yeah, so I don't have what the hell I'm doing. I don't know. Just in the morning, I'm super down today. So inside this family, I like to see higher prices. So I just marked out this 1 hour bullish family. In 15 minutes, nothing is there in this leg. I don't see anything. I don't see literally anything. And price sweep this high. Price just sweep this high. I went all the way down to 5 minutes, in 5 minutes, and then 3 minutes. It's very clear what happened. Some sort of liquidity has been taken. This should be the first leg. This is the fair value gap. Recently formed fair value gap that holding the price. This is going to be the first leg, and this is going to be the second leg. Swept this high getting swept. And there is no displacement through the swing low. This is going to be the significant swing low. Now it get displaced. So this is the manipulation leg to the upside. Now it get displaced. Now it gives the structure shift to the downside. So I consider it as a structure shift with displacement. So I mark it out this. So this is the swing that gives the structure shift. So I like to see this high continuously getting protected, and it also leaves two family gaps. So sunset has been taken high. First leg, second leg has been swept. There is a significant swing low. Manipulation important swing low getting broken displaced, and this is the swing which helped to uh, break this level, right? So and this low also not get displaced but still a kind of closing below, but it's not displaced yet. Okay, fine. After saying this, my plan is nothing but to execute the cell model, and I clearly see there's a beautiful fair value gap here. So if this swing continuously holding the price, which means it should um, push the price at least to this low. This is going to be my take profit TP1. And if this parallel gap failed to hold, then I can expect the market to reach this low. So that's my plan in the morning. So once I identified this displacement, I executed my first position inside this exactly at the breaker inside this parallel gap here. This is my first entry. Once the candle, this is my first entry, and in 1 minute, once the fair value getting flipped here, I close my position. Once I identify, it just swap this premium fair value gap. Just tap the premium. So I exited my first position here, and I closed once it closed. It's not displaced, but it's closed above, right? So I closed my position here. I closed my position and expecting this fair value here and expecting some sort of reaction inside this fair value here. So I waited for the price to reach at least this low. For the price just induced, just tap the fair value here. You can clearly see the minor sweep of the high. This is the internal getting minor sweep. Then it got displaced. Leave this fair value gap. Hold. Start to pushing lower. Once I identified this, I executed my second entry here. This is going to be my second entry. Sorry, this was my second entry. And once the fair value gap getting tapped, I entered one more position here. So in 1 minute, I can clearly explain that thing to you. So once this fair value getting closed above here, I closed my position, first position. Once this liquidity has been swept, once the price got displaced, I executed my second position here and third position exactly at this range. First position, and I marked out this fair value gap. Once the price repriced to this point, I entered my second position, keep my stop loss at the side. Why? For me, this price after the displacement price rebalance to this fair value gap, some sort of internal getting swept, big displacement to the downside. So if it is a turtle soup, then I don't like to see any price reach this point. This low continuously getting protected until my target hit. So according to my plan, I entered and I closed my profit exactly at this point. So at this point, I closed my profits. So I just wanted to do my projection. So here I entered. So this is my initial stop. Once the price start to move towards its direction, I change my stop to this point. But this is my stop, and my target is this. Just this. Not even 1:1.5. Not even 1:1.5. But my catch gives 1:5. 1:7. If I just hold the rate, it's 1:7. The reason why I close the trade is this 1 hour fair gap. This 1 hour fair gap, marked this out in a higher time frame. So I thought like this is going to hold the price. Sorry. Towards higher. So that's why I'm not holding this selling model. But actually today is a complete selling model. It's a complete bearish deal. What just happened? First entry, second entry, third entry. In 1 minute. I explained it in 1 minute, right? Yep. So I closed all my positions here. I closed all my positions around this point. Here I closed all my positions. Then inside this range, once this area getting swept, I executed my buy position here. This is my first buy. And inside this fair value gap, in 1 minute, I executed my second buy here and targeted this high. Once this price getting respected and displaced towards downside, I closed it swiftly and just closed the laptop and walked away. I'm not executing any trades after this buy entry. So since from the morning I was super bullish, so I failed to hold my beautiful sell entry. I closed it swiftly in order to go for buy. Once this area getting swept, I executed my buy position. This value I'm getting flipped. So executing buy position here. This is my first buy. Here I executed my first buy. And once the price rebalanced to this fair value gap, I executed my second buy here. So first one, second one, I targeting this. I expect the continuation. But once the high, low, high breaker, once the price approaching this breaker started to get displaced, I was not good. I was not good at this point. I was like, no, I'm completely wrong. The selling continuation is still going on. So I expected I expected this fair value gap to flip in 5 minutes. So I expected this fair value gap to flip. Once this value getting flipped, I was super happy to hold the trade towards this side. That was my plan. I considered everything is an engineer liquidity. Once this fair value gap getting respected and give big displacement candle like this, I closed all my positions. I closed all my positions on I closed almost all my positions. On one position, I just keep it here. I closed once I identified this displacement. I was like, oh no, it's bearish continuation is going on. I closed all my trades. Once this low getting swept inside this fair value gap, I just moved my stop from this point to this point, and it is also getting stopped out at the very next candle. That's it. So complete bearish day. I got confused. Not confused. My bias was wrong. I try to be bullish today, but the market is not actually. So according to the price action, manipulation leg, structure shift. So this is going to be my TP1. Beautifully hit. This is going to be my TP1. So mostly my TP1 is going to be this. My TP2 is going to be this. This is how I need to trade every single day. But due to this 1 hour fair value gap, I need to do something here because it's like a good bullish move and it's a breaker aligned with the fair value gap in 5 minutes and 15 minutes. So um I don't need to be careless inside this fair value gap. So I need to close my positions at exactly at this point. This is going to be my TP1, exactly one, and this is 2 to 2.5. The low, which is the London low, is going to be my TP2. So I think is played really well. So according to my projection, price exactly take my 2 to 2.5 and almost reach the range 4, right? Okay. So I can show you one more thing. If I use the indicator session marker, I can show you one more thing. This is also on some sort of market, sorry, ICT concept. Asian range break below, Asian range swept below, take out the Asian high. After that, this is the London range, swept the London range. Once the London range has been swept back, can we expect the price London low? We can target London low. So Asia low high taken, London high taken, and structure shift. So where can we expect the price to come? London low. So and this is what the 2 to 2.5 ratio projected. So as per the standard deviation, as per the market maker sell model, it's played really well. There is no place for me to look for buy. One place it just flipped to the 3 minutes for earlier, but it's nothing in 5 minutes. So I don't see any swing high getting displaced. Nothing is there. Every swing is just keep on selling towards downside. So in 4 hour later, I identify that okay, fine. In 4 hour later, I identified one thing. So it just sweep the liquidity and the high has been taken. And the parallel gap that I marked in 1 hour, that is nothing is there in the 4 hour time frame. In 4 hour time frame, there is nothing here. The only parallel gap is created is here. So once this liquidity has been swept, price expanding towards this parallel gap. So that's what I'm not recognized in the morning. So that's the mistake today. So I just marked out this five gap in 1 hour, but in 4 hours it's nothing. It's nothing, literally nothing here. The only five gap is here is this. So I should target this area, this 5 value tap or the midpoint of the 5 value gap. Both are achieved beautifully. So fine. This is what I did in the morning. My projection was wrong. My projection is just so okay, fine. This is a good displacement after this swing high, after this swing, good displacement, 5 value gap. So this is all the low resistance return. So I like to see price ran through all the high. That's what I planned. So I like to see buying continuation towards upside. So that's why I'm not confident with my sell model. But the thing is, price take out this high, this high, this high. That is a lot of liquidity has been taken, a lot of buy side has been taken. That's why the price just repriced to some sort of inefficiency in higher time frame inefficiency. So that's it. Have fun. We'll see you in the morning session.